Most traders fail to make money in the market not because they don't know about the technical analysis. It's because they keep on repeating the same mistake over and over again. If you're struggling to make consistent profits in the market, chances are that you are making one of the mistakes which I'm going to tell in this video. Stay till the end because I'm going to tell you exactly how to avoid them and start trading like a pro. Overtrading, the account killer. Most traders have a mindset that more trades equals to more money, but in reality, more trades equal to more losses. And why we tend to do so? The reason is pretty simple. The first one is impatience. We want to make a lot of money in just overnight. We want to become a millionaire from this stuff. We also tend to do revenge trading. When we lose money, we want it back. So in that case, we put more money in that stuff and we keep on losing. And that's the thing. We end up losing our account. And the last one, that is FOMO, that is fear of missing out. What we tend to do is that we think that the market is going up, it's going to leave me behind, and I will lose the opportunity to make money in the market. And what actually happens, we tend to enter at a wrong point. So, entry is a very important point to keep in mind. Well, how to fix this? It's pretty simple. Set up a trading plan, do only 2 to 3 quality trades in a day, just wind up or just backtest all your trades, look for the journals, and you will see that in which trades you are supposed to be taking action and which you should avoid. So the best thing to do is to focus on high quality trades and learn to be patient, learn to sit on your hands, because if you keep on pushing that buttons, you're going to end up losing. This game of trading is 90% patience and 10% execution, risking too much per trade. So, the biggest problem most of the traders face is risk management. For like the beginning 2 3 years, they don't even know what is risk management, and they tend to think it's not worth knowing because we want to become millionaire and we need to put of that $1,000 account in a single trade and end up blowing that account. So that's why 90% of the retailers lose in the markets. That's the key. There will be thousands of opportunities in the market, but you will not have thousands, hundreds of thousands of dollars to just throw away in the market like that. So use your money, preserve your capital, learn to preserve your capital. The only way to do that is learn to risk only 1 to 2% in a single trade. If you're trading funded accounts, only go for 0.5 to 1%. If you're going for your own money, the max you should go is 2%, not more than that. And you can expect to make like easy, if you're risking 1%, 2 to 3% is enough. And if you're risking 2%, 4 to 6% is more than enough for a day. And it's not necessary that you should trade every day. Try to avoid those trades which you don't feel like you should, and don't overtrade. That's the main key, which I already told you. There is another way to get safe. That is, always use a stop loss in the trade. Don't put those alerts only. Don't put those signs because it tends to ruin our risk to reward ratio. Sometimes market go beyond our stop loss alert zone, and when we see our alert, we are quite late. Ignoring trading psychology, emotion, that is another account killer. Trading psychology is one of the most undervalued topic which is usually ignored in our trading industry. Most traders think that emotions doesn't matter, and if we look, there are some hedge fund traders, there are some flow traders even who get emotional and they tend up losing their wealth. What's the reason that people don't focus on these things? The only way to get rid of this thing is through learning and experiencing new things and following how to trade like a robot. Okay, why it happens, why it tends to happen? The first reason is pretty simple: our mindset. We need to change our perspective, our mindsets regarding the market. That market isn't just like the things where you're gonna go and work like a job, and it doesn't matter how we're gonna behave, or we're gonna end up getting the salary. It's about our actions, it's about our execution, and our execution depends on our mind and the way we behave. Because if we are sad, if we are angry, we tend to make wrong decisions. So keep that thing neutral. You should be neutral. While second, fear and greed, what we tend to do is we tend to exit too early from the trade sometimes, and it goes for our take profit. And sometimes what happens that we bring our stop loss way too down, and we end up losing our accounts. So follow these things, and be rigid, be strict with your rules, plan before entering in the trade, and don't change it laterwards. Okay, only in some exception situations which you should write in your trading plan, that in what condition, in what environment I'm supposed to exit, uh excluding your plan rule. All the things come, how to fix this trading psychology problem. The only way, my friend, is to journal. You have to journal, you have to build good habits, and you have to meditate. You have to keep your mind calm. And the final one, the most important one, I suggest you to read some books. Yeah, I have just finished this book today, and it was worth my time. I wasted almost a lot of time in this book, and I was very procrastinative this time on reading books. But at last, I finished this book, and it was really worth my time. I learned that every book gives me something valuable, and specifically in trading psychology, if you want to improve it, you should read some good trading books like Mark Douglas are pretty great, and you will get some other books available on Amazon. You can just search on Google. You will get everything you want. Trading with a clear plan. Random trades is equals to random results. Every trader, every professional trader, every hedge fund traders have a proper edge, have a proper strategy, and it's pretty rigid and it's pretty flexible. Well, how I am supposed to present to you what I mean by that words? What happens the time when market is very volatile, means very flexible, we should keep our rules pretty rigid. The time when market seems pretty rigid, pretty sideways, not giving right things, right answer, at that situations you can go a little bit flexible depending on the situation. So you have to go both ways. You have to learn both sides of this coin. You have to see there's a tails, you have to see there's a head, and according to that situation, you have to trade. Trading is not easy, my friend. It's a game for some genius people. From for some genius people. Why I say so? There would be some dumb traders who would be making money on internet, but the thing is, they're not gonna go a long term. And what they usually make money from is courses, fucking up people mind by giving them some shitty knowledge. But that's not the reality. If you want to play the game long for 10 to 15 to 20 years, you need to have a great strategy and a great mindset. For that, you need to change your habits, you need to change your lifestyle. And usually, what I see, front influencers' lifestyle is pretty shit. They are not healthy, they don't go for gym, they don't meditate, they don't journal. These things needs to be done. Always journal. Like, I always journal. I Whenever I'm done with trading, I always sit down, look for my trade, I write that down. Recently what I did, I've started journaling on a app named Notion, and I've been doing all this stuff on that app, and it's pretty easy. If you want, I'll bring that video for you also. You can just comment me down. So that was all I wanted to discuss in this video, and hope this video helped you somehow. If you have any other problem, or you feel like that you have any other trading problem, any related to trading psychology or risk management, you can just comment me down. I'll try my best to help you. See you in the next video, and keep on grinding.